Once upon a time, a house was a house. You bought it, you lived in it, maybe sold it for a little more a handful of years later. But starting in the 1980s, something shifted. Wall Street looked at Main Street and thought, wait, why aren't these houses working for us? Enter the idea of the home as an asset class. You've probably heard that phrase tossed around like it's normal, but think about it. Turning homes into assets meant they weren't just places for families. They were chips in the casino. The mortgage-backed security boom of the 2000s, that was the first season of this Netflix drama. And when it all collapsed in 2008, who swooped in to profit? Not you, not me. It was private equity. 2008 was sold to us as a financial meltdown. But for Blackstone and other mega investors, it was a clearance sale. Foreclosures everywhere, banks desperate to unload properties, families losing homes, and Wall Street buying them by the thousands. Picture it. You're out front, watching the sheriff tape a foreclosure notice on your door, while some hedge fund manager in New York is clicking buy on a bundle of houses he's never seen. Blackstone alone bought more than 80,000 single-family homes after the crash. Entire neighborhoods went from homeowners to corporate landlords practically overnight. And here's the kicker. Those homes were scooped up in cash. Regular people couldn't compete because who has $300,000 lying around when you just lost your job in a recession? But billionaires, they had unlimited credit lines. The game board tilted permanently. So how do billionaires keep this scam going? They have three main moves. 1. Bulk buying. Hedge funds buy entire neighborhoods at once. Imagine showing up to an open house only to learn it never hit the market. It got sold in a package deal with 50 others. Regular buyers never had a chance. 2. Rent extraction. Once they own the homes, they jack up the rent. Studies show corporate landlords raise rent faster and evict tenants more aggressively than mom and pop landlords. Why? Because you're just a line item in a spreadsheet. 3. Algorithmic pricing. This one is straight out of Black Mirror. Companies use software like RealPage to coordinate rent prices across entire cities. Landlords literally sit in meetings where the algorithm suggests raise rent by 12%. Most competitors will follow. That's not competition. That's cartel behavior in Excel. The result? Housing prices aren't just market-driven. They're manufactured, managed, and milked by billionaires who turn shelter into a subscription service. Here's the plot twist. You might actually be funding your own rent hikes. A lot of these corporate landlords don't just operate with billionaire cash. They're fueled by pension funds and retirement accounts. So if you're putting money away for the future, congratulations. Your 401k might be part of the machine driving up home prices today. It's the ultimate loop. Workers' retirement savings are invested in funds that buy houses workers can't afford, forcing them to rent longer, which generates profits for the funds, which are supposed to support those same workers later. It's like financial cannibalism. As if Wall Street wasn't enough, Silicon Valley looked at housing and said, cool, let's disrupt that too. Remember Zillow's iBuying experiment? They tried to turn home flipping into an algorithm. It bombed so hard they had to shut it down and fire thousands of people. But not before they distorted local markets by overbidding on homes pushing prices way higher. Then there's Airbnb. On paper, it's just renting out your spare room. In reality, investors bought up houses just to turn them into permanent short-term rentals. Entire cities, from Phoenix to Lisbon, saw local housing vanish into tourist stock. Want to know why your rent jumped 30%? Half the building is now Airbnbs. And let's not forget Elon Musk's buddies talking about tokenizing real estate, because apparently buying one house you can't afford isn't depressing enough. Soon, they'll want you to buy 0.0004% of a house like it's a crypto coin. You'd think regulators might step in, right? Wrong. In fact, governments basically rolled out the red carpet. The Federal Reserve pumped trillions into the system after 2008, making money dirt cheap for banks and billionaires. Meanwhile, regular people couldn't even get approved for a basic mortgage without selling their soul. Zoning laws in many cities still block affordable housing, while tax codes reward investors with juicy write-offs for depreciation on homes that are actually appreciating in value. Even today, big landlords use LLC mazes to dodge taxes, hide ownership, and make it nearly impossible for tenants to fight back. Transparency? Forget it. Try suing a billionaire who technically owns your house through 12 shell companies registered in Delaware. Here's the part that stings. This isn't a temporary bubble that might pop. The rig is permanent because billionaires have rewired the incentives. Every home bought by a corporate landlord is one less home for families. Every rent increase sets a new comparable that other landlords can use to justify theirs. Every algorithm coordinating prices creates a baseline of what the market can bear. And unlike mom and pop landlords, billionaires don't sell when times get tough. They hold, refinance, and buy more. It's not about flipping houses. It's about controlling the supply chain of shelter forever. Think of it like Amazon. Once they dominate the market, they don't have to undercut anyone anymore. They are the market. Same with housing. Once a few players own enough of the housing stock, the game is locked. We need to talk about what this means on the ground. First, there's generational lockout. Millennials and Gen Z are stuck renting longer, delaying marriage, kids, and stability. Next, the wealth gap explosion. Homeownership is the #1 way Americans build wealth. By blocking it, billionaires widen inequality permanently. Then there is the rent burden. In many cities, renters are paying 40 to 50% of their income just to stay housed. That means less money for food, healthcare, or savings. And let's not forget about the hollowing out of neighborhoods and communities. When every house on the block is owned by a fund in New York, who then is left to care about the community? Who sponsors Little League? Who fixes the porch? No one. It's not just financial, it's cultural. Homes aren't homes anymore. They're spreadsheets. The good news? People are starting to catch on. Tenant unions are forming across the country, fighting corporate landlords in court. Cities like Barcelona are banning new Airbnbs to protect local housing. Lawmakers are floating bills to limit bulk buying by private equity. But let's be real, the billionaires aren't scared yet. They're already lobbying, spinning, and rebranding themselves as providing much-needed rental supply. Translation: we stole your house, now pay us to live in it. Here's the final twist. Housing isn't just about housing, it's about power. If billionaires can own the roof over your head, they own your choices. They decide where you live, how much you pay, whether you can stay or go. It's not feudalism with castles and knights. It's feudalism with Excel sheets and eviction notices. And that's why it feels like the system will never change. Because for the people at the top, it's not broken. It's working exactly as designed. So the next time someone tells you home prices are just the market, remember, markets don't just happen. They're built. And this one was built to funnel wealth upward forever. The housing market didn't get rigged overnight. It was rewired piece by piece by banks, by billionaires, by algorithms, until it stopped being about homes and started being about profit streams. And unless enough of us call it what it is, we'll keep paying rent into their system like NPCs in a game we never agreed to play. Because in the end, the question isn't, why is housing so expensive? The question is, who designed it this way? And why are they still allowed to run it?